The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 18th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. And we should always remember this. Diligence is the mother of good fortune. So let's go be diligent and let's create a fortune, folks. And during the next hour, we'll do that using some extraordinary tools that help us in trading. Those tools, such as that A to B equals CD pattern, that lightning bolt pattern. We'll utilize Fibonacci expansion and retracements, the combination of which make those Gartley and butterfly buy and sell patterns. We'll utilize Japanese candlesticks because the markets are always communicating to us, and that's the language that it uses out there. We'll utilize all the tools in our bag. Of course, this is an interactive show. That means we would love to hear from you. You can spread the love by giving us a call at 877-927-6648. Internationally, the number is 727-445-1044. Together, you and I, we can go hunting for bulls and bears. It is terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 75 points. She's trading out at 17,232. S&P up 8, trading at 2,009. Composite up 25 points, trade at 45.86. Russell 2000 up 5. She's trading 11.58. DAX up 121 points. FTSE up 41. Gold down 15. Silver off 33 cents. Platinum down 18. Late sweet crude off 43 pennies out here. Moving to the upside. Priceline getting in on the fray, having been whacked here for a bit of time. It's up $15, a little over 1%. Wynn Resorts up 3%, up $5. VIP Shop Holdings up 2%. Up $4. Baidu up 4. Tesla up 3. SanDisk up $3.65. She's trading inside her gap. Air Products and Chemicals, that's off to the moon. Well, actually beyond the moon, I think. That's trading up $3.27. You've got Fomex Pharmaceuticals, IPO today. They're pushing out paper. It's trading at $9.27. Google to the upside. You've got to the downside, Rewalk Robotics. I think that thing has kind of been on fire here the last several days. So that's just giving back a little bit of its gains, down 11%. Repros Therapeutics, RPRX, down 30%. Marchex, MCHX, that's off 43%. Continental Resources, CLR, down 5%. Pier 1, that looks like Pier 0. Pier negative 1, maybe, down 18%, off 278. United Therapeutics, down a couple of bucks. Royal Gold, let's go check in on some of the gold mining equities out here and see what they are doing, see how they are handling moved lower in metals. Let's start off with Rand Gold. GOLD is the ticker symbol, trading at 72.51, 54 cents right now. So let's go check in on Rand Gold. Let's get rid of this. We got a monthly chart. Let's get rid of the monthly. Well, we're in the monthly chart. What the heck? Let's why get rid of anything? Let's just start in the monthly and see what we're doing. So we got Rand Gold right now trading into the monthly candle from January 1st, 2014. That's got 17 million shares. Hey, it's only September 18th. So far, it's done 8 million shares halfway through the month, a little bit more than halfway through the month. So we could say it's pulling back on light volume. Key reversal session, by the way, on that monthly chart out there is what it looks like. Let's take a look at a weekly chart. Let's just kind of flip through this one day at a time, one moment at a time, one period at a time. So we got the weekly candle that's being threatened here this morning. Those are the lows from June the 2nd. 1.8 million shares there. That low is 72.14. You're at 72.48 so far. Interest session low, 72.48, 2.3 million shares moving into 1.7. Not a good scene, but let's take this a little bit further to the left out here. This broke out with 5 million shares. That was the week of February the 10th out here. And the problem is, since that's our wide price spread accelerated volume candle situation, Randgold could make a move. I say could because you got this little open gap out here at about the 66.29 to 65.32 is what it looks like. So that could be the target area for Randgold. It'll follow what Goldilocks is doing. Let's take a look at a daily chart. Let's go see what the daily volume looks like out here inside of Randgold Resources. Daily volume so far, 128,000 shares after yesterday doing 636. We've only been trading for 42 minutes, so that's pretty decent volume out here. The swing that it's dealing with on a daily basis, that only had 389,000 shares. So you're coming into that with much too much volume. That is June the 3rd out there. That's what sets up that 66.29-ish level. That was on the weekly that we were looking at. Looks like that may be the number for Randgold. GOLD is the ticker symbol. Let's do the same thing out here. Let's do them with a couple of them. Let's take a look at Barrick Gold. ABX is the ticker symbol out there. You got Barrick trading down a quarter right now, 2.5 million shares already today. Let's go see if that 2.5 million shares means anything to you and I. 2.5 million shares is headed for the swing point low of May 28th, and that's got 11 million shares. So 2.5 in less than an hour's worth of trading. That's pretty good volume coming into the swing point. It looks like Barrick Gold going to get down and test the 1547 mark out there. Nothing getting in the way as we speak right now. If we take a look at a weekly time frame, let's go do that. The weekly time frame for Barrick, see what it says out here, see what kind of volume that it's got, that it's dealing with here. So you got a hammer candle out here. So that says that low is pretty important. And that's the hammer candle that was formed out here on the trading session of May 26th. The price point on that is going to be your 1547. That hammer candle at 46 million shares for the week. You've done 28. So you're coming back on a weekly chart with light volume. So that's pretty nice. But you're already trading inside there. That says the best trade setup is let it test the bottom of that hammer candle. We'll see if it can hold that level. Test it, reject it, do it with lighter volume, then maybe that sets up. And then we got to see what's going on with the Goldilocks as well. On a monthly basis, let's go see if there's what that swing volume is on the monthly chart back here. Well, the truth is, you got to look at the volume from July 1st, that at 421 million shares. Yeah, you're coming in way light. So that's a beautiful thing. But the top of that swing point, you're not going to reject that, that's for sure. So you're going to have to make decisions on a weekly time frame out here. By the way, the week of that we were looking at takes us into the month of May, is what it looks like. May had 183 million shares, and you're pulling back with 115. Of course, we are only at September 18th, and anything can happen. How about AEM? Let's go take a look at AEM. 415,000 shares to the downside this morning. Trade out at 32.82. AEM, if we take a look at the swing that it could be trading into, well, your swing point low is the October 1st, 2013, 49 million shares, the top of which is 31.96 out here, and you're not that far away from 31.96. So let's go mark that, Johnny, on the spot. 31.96, the low so far, 32.75. You ought to hit that. So far, volume this month, though, only 25 million versus 49. So that's looking pretty good there. Let's go see what's going on the weekly chart for Agnico Eagle Mines. If we pull this back out here, I'm not so interested in that session now. I'm going to go ahead and get rid of that line. On a weekly basis, pull this back. That is your sign of strength, though, on the weekly chart. That's at that 31.40 level. Swing point wise, though, you're looking at the actual swing is May 26, 9 million shares. You're back with 5.4 million shares for the week. So that's good. It's coming in with some lighter volume out here on the weekly. Let's take a look at the daily, see if it's busting the swing point with some volume out here. AEM, again, is the ticker symbol. Well, it just took out a swing point. That had 2.5 million shares, and it was done with 426,000 so far. Multiply that times 6 just as a gauge out there, and you got similar volume to that swing point out here. That is in Agnico Eagle. Let's pull this back further. Yeah. Here is probably the level where we'll get a little release of information. So we had a nice little open window, a nice little sign of strength on May the 2nd. And the top there is 32.43, but the ideal trade is coming back and testing the 29.67 level and holding. That is still a valid window. It was tested 3 times. Trading session being May 28th, May 29th, and May 30th. So that should be a pretty decent level of support, 29.67. Don't tell any of that to anybody who's long and is still holding on to 32.74 and it's open at 32.73 is the low out here. But it looks more like 29.67 for anyone that would be inside that trade out there. So use that for your pain gauge. How about take a look at Freeport-McMoRan. Freeport-McMoRan, I recall this formed a hammer candle here not too long ago. So this is holding up pretty darn nicely. If we take a look at Freeport, here's your hammer candle. That was from September the 10th out here. That has not even been threatened. So Freeport-McMoRan actually not too bad with regard to the way that it is trading out here. It has tested a swing point from June 30th. 6.4 million shares was tested with that hammer that had 7.8 million shares. So you'd like to see maybe the low of that hammer get tested during this area. Let it be done with less than 7.8 million shares. So far today, 1.4 million shares, but it's held up pretty well. If we take a look at Freeport-McMoRan, let's take a look at a couple things. Let's try to take a look at a trend line. Let's try to look at a channel. Let me try to do this. I'm going to use this body right here, see if I can get a pretty, that seems like a pretty good line to use as the channel line, don't you think? Let me do this here. It's going to make it easy for me to draw. This is oftentimes, if you're watching us on Tiger TV, one of the ways that I'll go and identify my channels, because I'm trying to identify the largest number of co-located opens and closes. In this case here, I'm looking at, and I'll do that by taking a look at the line tool out here. So as I do that, now I can go ahead and I can put my channel lines. I can just start right back here as my spot coming down there. Just click on that. And so here's a pretty narrow banded channel out here, but it looks like that really is the channel. I might have just goofed on the bottom portion of that, but that's really not a big deal. Let me get rid of that trend tool out there. Delete. There we go. Okay. So here's the channel inside of Freeport-McMoRan. So it's still in a descending price channel. It's the daily chart that we're looking at. If it can break out above that, that would be pretty positive. It's already giving you a nice message on the daily chart out here. Let's go see what it says on the weekly time frame. See if there's any kind of positive message being reinforced by a weekly time frame from Freeport-McMoRan. Okay, so this thing here, here's a hammer. You talk about the hammer out here. Here's a nice hammer from February 3rd, 2014. Now, this one here got down and tested the low. That hammer had 67 million shares, was tested with 74 million shares. Nonetheless, you had another little bull sash candle that took place on March the 17th. Then it was off to the races and went all the way up to the highs out here. Now, on a weekly basis, no reversal signal whatsoever as we speak. Pull this back a little bit further. We'll continue to look at Freeport-McMoRan when we get back from this first breakout here. Right now, we've got the Dow. She's trading out at 17,233. That's up 76 points. S&P up 7.5. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, before we went to break, we were taking a look at Freeport-McMoRan. What I put up on my screen out here, if you're watching us on Tiger TV out here, I've been working on a automated version. This is a Stevie version of primary trading range boundary lines. Different than the work that Bud Rolfs uses and taught us, but that's just simply because I've got access to so much more information now, and I've been developing an automated version. The good folks out at Traders Formula Consulting Group assisting me with this project. A great group of people to help. If you've got an interest, if you use eSignal and you're looking to be able to create your own strategy. It's a good group of folks to work with. Now, we're looking at a monthly chart on my screen now. What primary trading ranges are just simply natural areas of horizontal support and resistance. If you're watching this on Tiger TV, you're going to see some red lines going across my screen. The red lines, the ones with the dashes, the larger dash lines, that is the area where we have the largest number on the monthly chart, the largest number of co-located open and closes, the number of candles. You can see out here back at the price level of $7.62. If we utilize all the data that the chart provides for us, there were 27 occurrences right in that price range. And 762, it's close. It's not exactly there, but we've got to put a number up on the screen out here. Eventually, I'm just going to round it, I think. But right now, $7.62. The next largest number you can see if you're watching this night. You might be able to see it, maybe you can't, but you can certainly see the dashed line. The next area where you've got the largest number of, on a monthly basis, co-located opens and closes happens to be at $34.44. Important areas for both support and resistance. Well, you're trading at, $34.51 as we speak right now. So this may be, in fact, a very good level of support here for Freeport-McMoRan. Now, it is a monthly chart that we're looking at. Let me just turn over here to the weekly chart for a moment. I'm going to actually come and I'm going to turn. Well, I'll leave the monthly numbers up on the screen. I'm going to add now the weekly. Now it's going to take me just a moment here to display the weekly out here to go ahead and add in the lines. And let me see if that looks right. Actually, what I'm going to do here is let me turn off these midpoints because I can change. I'm actually going to turn off the monthly as well. And so let me see on the. I have the weekly. I have the midpoint lines. Let me turn those off. There we go. I'm going to actually pull this back just so we can see how well this actually contains price out here. You can see as Freeport-McMoRan, the question becomes if you had access to this, how would this help you in your trading and investing? And as price was getting up into the $60 range out here, that was on the week of December 27th. Remember, these horizontal levels of support and resistance out here, these were formed well before price got. It had nothing to do. It had no influence when Freeport-McMoRan got up to the $60 mark out here. And if I expand that up there, we use a couple of different tools out. I'm going to expand this out. And then I'll blow it up just a tad on my screen out here, just so we can take a look at it, just to see the power of understanding these levels of horizontal support and resistance. So here we got Freeport-McMoRan that gets December 27, 2010, gets up into the $60 range. And at that stage was running right into resistance, okay, that next primary trading range target line. Now, that doesn't say, hey, you had to exit the trade out here. But if you took a look at the week, remember it's a weekly chart we're looking at, January 3rd, 2011, and maybe you had, maybe you'd already gotten over whatever little hangover. Maybe you didn't even drink. Maybe you were just drinking a little bubbly, sparkly water out there, some club soda with a lime or something like that. And you were looking at and you were saying, hey, January 3rd, Freeport-McMoRan ran into resistance and did a key reversal session out here, and also was doing it with less relative weakness. How would that have helped you in your trading? In any event, let's go back to where we're at right now. So you can see how well these target areas here. So in the case of Freeport-McMoRan, I'll go ahead and I'll turn the weekly back on, or the monthly back on my screen. What we can say here about what I can say about Freeport-McMoRan is basically anything. But what I am going to say is if 34.44 fails, what Freeport-McMoRan will do is get down to the 30.61 level, and it'll get all the way back to that hammer candle back here from February 3rd, 2014. Interestingly enough, I'll go ahead and I'll blow this up on the screen for you as well, too. Take a look at that hammer candle. Was created on hammer low back in February. Take a look at where price was trading down into. Yeah, the bottom of a weekly trading range, primary trading range boundary line out there. Pretty cool, huh, folks? Anyways, that's our analysis of Freeport-McMoRan. It needs to hold this 34.44 level out here. Otherwise, 30.61 is likely your next pretty good buy point, and that is on ticker symbol FCX. When we get back, let's go hone in on the NASDAQ, on the ES, on the Dow futures. Let's go take a look at 30.120. The 5-hour energy drink brought to us by our man Saratoga Bob. Let's go see if there's any signals out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 79 points, S&P up 7, Composite up 21, Russell 2000 up 4 points. Before we, let's go check in on a couple of things, then we'll go dive down into some of the intraday charts and patterns out there. If you didn't catch the first hour of the show, one of the tools, one of the charts that I started taking a look at and identifying for you was the difference between the Russell 1000. The Russell 1000, really the large cap for the market, represents 92% of the market out here. That's the top portion of my screen in the Russell 2000. Russell 2000 being a laggard, but in this two-step, this little tango out here, what we want to do is see if there's any divergent patterns that should have some meaning to us by taking a look at past patterns out here. And what we prove to ourselves, or what I prove to myself, I don't know about you, but is that it does matter. And we have going on right now in what leads the actual, what is the providing us with the message of the markets is actually the Russell 1000. And at this stage here, the Russell 1000 is just tinkering with the swing point from September the 3rd out there. It hasn't broken through that level, but if it does break through that level, that may be providing us with a message about what the weak link in the market is likely to do. These divergent patterns in the past, not always, but have a high probability, extremely high probability of forecasting what is going to take place in the future. So we got to watch that high inside the Russell 1000. I've turned up the price, but it's right around the 1120-ish type area. You're trading at 1119 right now. So we want to watch that today, tomorrow, to get some type of feel for what its message is. If we do take a look at the VIX index right now, VIX index trading below its 50-day exponential moving average, 1280. If there's ever been a clear sign of liquidity, and what this means, it is the VIX index and the 50-day exponential moving average. And really, folks, it is just simply about liquidity. We can have all of our beliefs about the economy, about everything, why things ought to tank. If we just keep it simple, we turn off the news, we just pay attention to these stock charts and patterns out here, we'll actually all do very well. Hey, look, you might be on the wrong side of the trade from time to time. In fact, you will be on the wrong side of the trade from time to time, but utilize this set of tools out here as a way to just simply make the decision-making easier, to go ahead and exit the trade, come back, revisit it. You can always because you got to ask that question. Hey, I know I got in the trade when I did, but now the question is, should I stay in the trade? Because look at what the information is providing to us. And at this stage here, you're trading below the 50-day exponential moving average, and that says, In fact, if we go back and take a look at one of my other favorite diverging patterns, and there's several out here. I included one inside the newsletter this morning that I believe will be the entire key to the market, entire key to the Dow. That's for sure out here. But let's go take a look at this currency pair, which is the Euro-Japanese yen versus the S&P futures on the bottom. The Euro-Japanese yen has just absolutely taken off to the moon. And if we take a look at coming back into the time frame here of September, when our markets made their high September 3rd and 4th. What you can see here is the Euro-Japanese yen is making higher highs, just continues to make higher highs, and our market here has not done that as of yet. That's a diverging pattern. That says that the market continues to motor along higher. That does not mean that we don't see retracements. What it does say is you might want to consider buying that next retracement. And that's the two messages behind the Euro-Yen and the VIX index. Now, we have a little bit of diverging patterns out here, and then we're going to add to it, right, the Russell 2000 and 1000 combination. Now, if we take a look at the summation index out here, the New York Stock Exchange needs, I believe, more than 1,960 is the number. Let's go check in on it, then we'll come back to this chart and see what kind of net advancing issues do we have here today inside the NYSE. Only 761. So the New York Stock Exchange is the Lee Corso of charts as we speak this morning, and it's saying, hey, not so fast, Steve-O. That price oscillator needs to get above zero, and the way that it does that is with 1,960 or more net advancing issues. If you get that above the zero line out there, well then, folks, then you've got another element of the charts that are saying long and strong out here. We don't have that yet inside of the New York Stock Exchange. Let's go check in on the composite out here. Oh, NASDAQ composite just getting above that level as we speak right now. How about that? Just at 0.49. So there are enough net advancing issues inside of the composite as it goes ahead. It takes out that little, or tries to get back to its highs from September 3rd out at the level of 4610 out there. So we'll see how this closes here today. But that would give the possession of the NASDAQ composite back to the bulls out here. Of course, inside the Dow, 30 of those stocks, that took place back on the trading session here of September the 16th out there, when its price oscillator went ahead and turned positive out here. In fact, if you take a look at where is it likely that the Dow should move to next, that price level here, looks like I somehow erased that. So I don't know why I did that, but let's go draw that pattern back in on my chart. We're going to take a look at expansions of swing points out here, and we're going to just take a look at where's the 1.272. So 13, what the heck am I talking? 17,374 out there. That is the next target. You're trading at 17,243. So you got about another 130, 140 type points or so for the and hey, it doesn't have to stop there because your 1.618 expansion is up at 17,656 out there. So it looks like that is what the Dow has in mind for itself out here. Now, let's go take a look at some intraday time frame charts out here, and let's go see what we see. Speaking of the Dow, let's go take a look at the Dow futures. Let's take a look at its 30-minute chart out here and see what we can see. So coming off of the lows out here that I'm looking at, a little low here at 11:30 in the morning. That was on. Come on, give me the date out there. Come on, Steve. Oh, might make it easier. I'll just put the data box and stop. Come on, where's the data box? Data box. There it is. Okay, see, it's off the screen, but that's okay. So if we take a look at the, is this doing it for me? No, that's not even doing it for me. Gosh darn. September the 16th out at 11:30. Made a nice little price relative strength divergent pattern. That's our low. What we can see here is that the as it made that fourth wave, an enchantment wave to the upside out here, and ran right into resistance of its TAS market profile. This is the Dow future we're looking at 11:57 out here. So you also made it's a 30-minute chart that we're looking at. So you got an evening star formation as you make that fourth peak, as you make a price relative strength divergent pattern, and that's the reason why we're seeing a bit of a pullback as we speak right now inside of the Dow. Of course, the key level here for the Dow is all the way down. I'm sorry, we're looking at the Russell 2000. Hello. Wake up, Steve-O. We're looking at the Russell 2000. Let me go back because we were on the Dow. Sorry about that. But that's what's going on inside the Russell 2000. I got a 10-minute delay there, so I don't want to really be spending time on the delay chart. Let's go take a look at these. So if I could do the quick rewind, I would do that. And the only way for me to do that at this stage here is to just say, okay, forget about what I said the last 2 minutes. Now let's take a look at the Dow. If we take a look at the Dow, as it was making a low here at 9:30, that was on September the 16th. That made a price relative strength divergent pattern. Nice little bullish engulfing session out there on the sixth wave down out of a possible seventh. And if we start that as our new wave count out here, well, you can see here right now as we speak in this time frame here, and this chart here completes at 11 o'clock, you're in that the seventh wave up. Has not completed here yet because you got to wait for that next candle session that would go between the 11 and 11:30 session, and that's when our man, the wave expert, Basil, will be up next. So if you don't take out that high, you've got a price relative strength divergent pattern potentially forming. We don't have any kind of reversal signal as we speak right now. You're also up above the market profile high of 17,136 out here. And then you got that question here. Yesterday's Janet Yellen session, that happened to form right there at a fourth wave, that peak D, and if you take a look at it, if you really take a look at the way that I understand Basil's system, you've got an instant restart that actually began right after that candle. So that being said, let's go mark that in the session out here. Why do I say that? Because here you've got that wacky candle where we saw a move inside of the Dow all the way down. Well, I thought I was going to be able to tell you what that price was. Looks like we went down to a low of 17,005 up to a high of 17,108. So a lot of wide price spread there. And then the next bar was an inside bar, and the very next bar was a breakout to newer highs out there. So this G may really not be that seventh wave on the way up inside of the Dow. In fact, you'd almost have to say until we see a reversal signal, that would be the case. And that's what's going on inside of the 30-minute time frame chart for the Dow futures. If we go check in on the, let's go check in on the 5-hour energy chart out here. Let's go see what its message might be. Its message was it did get down to that seventh and final wave inside that pattern out here, and that took place at 2,300 hours, and that was on September the 14th. And now it's in its fourth wave on the wave up. But this does not end until 2 p.m., and so that doesn't mean that is the end of the move. In fact, if we take a look at if we were to take a look at A to B equals CD patterns on this, we're going to have to use the exact same candle for both the high and the low. The A point, that's pretty easy. That's that one at 2,300 hours. But I would have to say our B point is going to have to be the top of that session from yesterday at 2 p.m., just as our C point's got to be the low. So right now you've blasted through the 1-to-1. That says likely looking at 17,197 as the next stop inside of the Dow futures. I don't recall what the expansion was in swing points out there, but that is in essence what what we're looking for. And, at this stage here, everything looks pretty long and strong. Now, that's in the 5-hour energy chart. Let's go ahead and finish this off, and let's take a look at the 2-hour Gatorade chart out here. Gatorade in that potentially in that fifth wave. Yeah, you'd have to say that it is on the way up, but everything looks pretty long and strong there. Hey, let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How you doing this morning?
Good. I was wondering on MUJ, why is it going down so much? It's a municipal bond fund, and where do you think it's projected to go?
Yeah, okay, let's take a look at MUJ is the ticker symbol. That's the BlackRock Municipal Holdings fund out here. And let's take a look at what it has done and where this might be headed to. And what it has done so far over the last 3 sessions here is it took out a swing point, Victor. And so where my eyes first go to is the August 5th level. And the low out there is 1390, and you had 70,000 shares that traded that day. And price blasted through with 88,000 shares. So at a minimum, that's an A to B equals CD to the downside. If we just simply take a look at the small A to B equals CD pattern, that's going to give you a price projection somewhere in the vicinity of $13.70, maybe $13.55. And that was the small A to B equals CD to the downside. Why it's going down, nothing more than there's more sellers than there are buyers out here. I want to put this on a weekly time frame, and what I'm searching for here, I'm trying to find any kind of high volume bar or anything inside this. So there's really nothing. So what I can tell you is that on the weekly chart right now, it shows that it's in somewhat of a trading range. Now, we'll use my TAS market profiles out here as something to pay attention to. So we know we have a confirmed A to B equals CD to the downside. 1311 happens to be your market profile low, and that would also get you into the swing point on a weekly basis in December. And if price is coming back there on less than 1.9 million shares, are you looking to buy this? Is that what you're looking to do?
Yeah. He's like a 7% big one.
If it can come back into that 1311 area with less than 1.9 million shares, your buy area is probably between 1252 and 1311. And that's what that's really what the weekly chart. But if volume for some reason accelerates, meaning you start to see more than 1.9 million shares, then that could set up a very large A to B equals C to the downside. And I wouldn't want you to be in on that. So watch the volume.
The market.
I'm sorry?
That means the market will probably follow this.
Let's take a look at that. Let's actually see if that in fact is the. I'm sorry.
It's like a foreshadow. It's foretelling something.
Yeah, let me see here. Let's see if in fact that's the case. Let's just see how quickly I can do this little test here for you. So if we see if MUJ tracks the market, what I'm going to do is I've got MUJ. I'm going to add a symbol out here. And what do you want to use? The Dow, the S&P? What market would you like to see? I'm sorry? The S&P. Okay. So if we take a look at the S&P, the SPX, we're going to see what it does out here. We're going to use line. I'm going to go ahead and use candles out here. Let's insert that. So at the bottom of my chart, I put the socks. I don't know why I did that. Let me put the SPX out here. My apologies. No, I tried to do it and I really screwed up there. Well, that's okay. The bottom of my chart here, I'm going to get rid of one here. So the bottom of my chart, if you're watching us on Tiger TV, folks, that happens to be the S&P 500. And what I would say, Victor, is that there's really not a correlation that you would want to use here. So I would say just trade the MUJ chart out here because we can see the S&P has been moving higher and the MUJ has not. So just focus in on the MUJ chart itself, and I think you'll be better off.
Okay, Bye.
You betcha. That was Victor in Paramus, New Jersey, and it was a good question that he brought up, and being able to just take a look at correlations. But in this case here, I don't see a correlation that is reliable in taking a look at the MUJ compared to the S&P 500. This is Steve Rhodes. This is TFNN. We got the Dow trading up about 90 points, trading out at 17,246. S&P up about 10, trading at 2,011. We'll be right back, folks. The Euro-Japanese yen looks like it's on its way to Saturn. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we got the Dow is up 92 points. The S&P is up 5. And if we take a look at Goldilocks out here, the gold is up $9 right now. Now, I'm going to put over a different chart out here. Give me a moment to do this. I want to turn a couple of things off. There we go. Now, this is kind of interesting. We're looking at the December contract here for gold. Oh, where did it go? Come on. Oh. You got to be kidding me. Oh, wait a minute here. I just had it. I just tried to do something. Well, I'm going to have to do it over again. Oh, son of a gun. Well, my apologies, folks. Let me see if I can do this here real quickly for us. So I'm on a different screen. You got to give me a moment to do that. I'm multitasking, but I think this is important for us to pay attention to. So it's going to be worthwhile. So just stay here. Give me a moment to get this done. Oh, wait a minute. I must have been looking at something else. What the heck was I looking at? Now, yeah, this data is the data now. I had some data that was accurate out here. You see, if I take a look at this chart, for some reason the data feed is not accurate. I'm going to have to switch over to a different system. I can't do that in the next couple minutes. I know that the way that this candle formed here on September 17th yesterday is not correct. What I showed on my chart was actually a bullish reversal, potential bullish reversal signal. But I don't know if the data is correct or not. So I want to apologize. It is what it is. I don't have a chart that can show you what's going on inside of gold. But we do want to be paying attention because there's a bottom that is due here in the not-too-distant future, and in fact could be today. So we just simply want to pay attention to that. As far as the market, the Dow's up 93, S&P is up 9. Again, in summary, just to summarize where things are at, that VIX index, real key. Trade below the 50-day exponential moving average is as bullish as you get, so 1279 is the key level there. Watch that summation index. We did see the composite tick higher. That's in a bullish range right now. The NASDAQ, the NYSE has not. It's not participating out here. We want to watch the Russell 2000, Russell 1000. Out there and see if it gives us a signal, but there's plenty of signals out here that the markets want to run to higher price and may want to run to higher price for a number of weeks. That means that you want to start taking a look at any of these retracements here as some buying opportunities. We'll see what happens with the Alibaba IPO. I can go back and give you as many instances as IPOs like that rang the bell at the bottom as you can with IPOs that rang the bell at the top out there. So I say do the work yourself. And the latest one was Facebook. So, and remember Facebook, that was a miserable IPO, wasn't it, the way that it came out with regard to the NASDAQ? But go back and put it on your chart. And what you're going to find out, now in this case here, the market was, was moving into some lows, making some lows back in June when Facebook came out. But that marked a significant market low as well. Not to the day, but it marked a significant market low inside of the market. And let's face it, with all the hype that we've seen here with regard to Alibaba, I don't know that one thing makes that one thing's going to impact the other. And just like I mentioned to Victor, we took a look at a correlation, change the trade the MUX independent, just whatever its chart pattern says, and just try to keep things simple out there. So, folks, stay tuned. Our man Basil Chapman is up next. Let's go ride the wave out there. Let's go wax our surfboards. Of course, it is Terrific Thursday. That means we got our man Larry Pesavento, then Daryl Martin, David White, the Tom O'Brien Show from 3 to 5, and our man Andy Heck. He'll go ahead and take us home. Hey, get over right now during this break between Basil and I and go sign up for the virtual trading competition. All kinds of great prizes, and I want you to participate in that. Have a great Thursday, folks. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.